The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
And the stock of the day is Reece. It's actually the best performer on the 200, just approaching 1 o'clock here in Sydney on this Monday. And that's as it targets a $250 million off-market share buyback. CEO Peter Wilson says the company has a strong balance sheet and that he remains optimistic for the long term despite short-term headwinds. If you recall, this was one of the big fails from the FY25 results season. It called the US market constrained, with the US facing housing affordability challenges, as well as pointing to a slow recovery in Australia and New Zealand. So it set an $11 floor price, a $13 ceiling price. It says that it will target $250 million, but set $400 million at the limit. Shareholders can submit applications by October the 17th, and it will announce the buyback price and any scale back on October the 20th. So that has got some excited out there in market. Let's find out if it's justified. Nathan, Reece, so battered and bruised. At one time, though, it was a real market darling, and it was also very tightly held by the founding family for quite some time. So what is this indicative of to you?
Well, it's when you have a global growth story, when you go out and acquire and grow, it does take on a fair amount of risk. And Australian companies have very bad track record going overseas. Not to say that I don't like that. I think Australian companies get a bad rep. They tend to do relatively okay, but it's tough, right? They have particular dynamics in the local markets. When they go outside, it's a different dynamic. It's hard to replicate. The good ones evolve, others struggle. And in this case, they've just kind of run into a bad economic cycle as well, and it's just been smashed. Multiple downgrades, you know me. Mm-hmm. There's no need to jump in a downgrade cycle till you get the first upgrade. This is not an upgrade. This is an interesting move that they've gone in for a buyback to support the share price. I don't see the dynamics changing short term. The overall dynamic in the US construction is still weak. House prices are still weak. Bond yields are not coming down, so mortgage rates are not going to come down too much to support any of that. And bond yields are not coming down. So for me, I think still it's a tough one. But this is the thing about cycles, right? This is a cyclical. A cycle turned on it and it got hammered. And people suddenly go, it's something wrong with the business. Technically, no, it's just the cycle, right? And they've done acquisitions at the wrong side of the cycle and we just come off. One of the best US construction plays in our market is James Hardie, and that's been touched up as well. You can be good. I mean, James Hardie makes money in a recession, and they got smacked. So, yeah, I think it's a tough sector at the moment. US construction is a really tough play. All the tariffs are running up costs. People can't afford to do it as it is. So I think it's really tough to play. At the moment, I'm just staying back and watching. But there's a few on my shopping list. But sometime in the future, James Hardie is one, Reece is another one. But I'm not jumping in right now. It's too hard.
Too hard basket for you too right now?
No, I think doing a buyback in double digit, sort of high 20 or mid 20 PE smacks of desperation. This is an attempt to counteract the narrative after that disastrous earnings call that Reece has no idea what it's doing and has nowhere to go, which I think, by the way, was a completely unfair read of that earnings call. I think they were just being honest that they've come up with some difficulties. M&A is hard. Global M&A is harder, as Nathan points out. Global M&A across a time difference in a market that is perhaps, let's say, less ethical than the Australian business market, because who's ever thought that United States private equity was upstanding? I come from a PE background, right? This was always going to be a tough challenge for Reece. I think they overcooked themselves by going out there, and they suffered the problem that all companies do when they make large offshore acquisitions, which is no matter how well you think you know the market, the seller knows it better. There's a huge amount of information asymmetry, and you're a bloody long way away if anything goes wrong. And that's hard to fix. The tyranny of distance and the opportunity cost that comes with that is material. So I think Reece has got itself in some difficulties with its overseas expansion.
You have to wonder why, if they were going to do this, why didn't they put this with the result?
Yeah, no, I think it smacks of desperation. They released a result, they didn't think they'd get hammered. They've got hammered, the board's got together and gone, we need to defend the share price at all costs. And, to me, panic in a boardroom is not a good sign. So I like Reece as a business. I think they have very strong moats in Australia. I think they have no moats in the United States, but they should have known that when they went over there. But the core Australian business has always been a very strong business. But the flip-flopping in direction so quickly following a bad earnings call smacks to me of board desperation and management incompetence. And I wasn't prepared to say that off the earnings call. I thought they were actually just being honest. I am prepared to say that now. So to me, it's a sell.
So that is the stock of the day, being Reece. So not quite the turning point that perhaps some are imagining, at least in the views of my guests here, Nathan Somasundaram from Deep Data Analytics and Andrew Coleman from Team Invest.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.